4-1 declining to advancing stocks at the open. Just a lot of cross currents for the market to deal with. You could sense the confusion that's out there. Let me show you the futures overnight. So remember what we had? We had the Powell speech late last night. Didn't seem to have moved the markets too much. We had reports that overnight China had issued a written response to the U.S. trade proposal ideas, not clear about what the response is going to be. Then we got resignations from a couple of cabinet officers in the UK about six and a half hours ago. That seemed to have dropped the market a bit. Then we got this most recent thing with the Italian economic advisor saying that if the Northern League gets a majority in the next elections, Italy might exit the Eurozone. That just came out just before the open. That dropped the market a little bit as well. So just a lot to deal with and a lot of cross currents. Look at the UK stocks here. That's where you get some noticeable, obvious moves. The big banks in the UK, Lloyds, Barclays down. The real estate companies, British Land, Barclay Group Holdings, these are big real estate companies, all down 6-7%. Here in the U.S., tech started up. I saw Apple was up, Corvo was up, Cisco was on the upside. But generally down on the rest of the sectors, consumer staples, energy, and retail, you see they are down 2%. Just put up the retailers here. And Jim's absolutely right. Walmart's the thing to watch right here. Walmart did well, but look what happened. JCPenney withdrawing the guidance. I mean, I know they've got a new management team, and they're trying to figure out what's going on, but comps down 5.4%. Ooh, ouch. Dillard's, they missed by a wide margin. Comps were good, but the inventory issues were very noticeable. I haven't heard that for a while. This is as good as it gets in the economy, folks. They're having inventory issues right now. So where are we in the retailers? And I think the key here is, look at Macy's yesterday. Their numbers were good. What we've got here is a handful of retailers doing well. Walmart's doing well. Macy's doing well. Home Depot looks okay. TJX doesn't report until next week, but they look like they're doing well. So there's a bunch of guys doing well. And then there's everybody else out there. And this is as good as it gets, folks. The economic environment. The comps are going to be a lot harder in 2019. So if you've got companies going on like JCPenney and Dillard's with the inventory issues, that's not a very good sign because they're not necessarily going to get a lot better in the near future here. Let me just move on, talk a little bit about IPOs. Uber is supposed to IPO next year. You saw their numbers. Now, this is not publicly traded, but just note here that you've got a company with revenues up 38%. Very impressive. Gross bookings up 34%. That's fantastic. And they still lost $1 billion. It's a little sad and unfortunate to see these big companies out there, these unicorns, going through an entire life cycle. Growth and then midlife issues without ever being public. So has the time passed for these unicorns? I know we're waiting for them, but we've been waiting for years. They've lost the growth multiples. If this company would have gone public 2 years ago, the stock would have been rallied and it probably would have been down 25% off of its highs by now here. One IPO trader this morning who's been around for 30 years said, there's been a lot of wing flapping, Bob, but there hasn't been a lot of flying yet. Finally, speaking of IPOs, we're waiting for a company to go public, big Chinese company down here. Weidai, a lot of young Chinese people down here, always nice to see them. $10 was the price talk. We'll see what happens there. They're the largest auto-backed financing provider in China.